What is going on, everybody? It is your boy Stas here. Welcome back to another video. So as many of you know, you should know at this point, midterm elections are coming up in less than a week from right now. And a lot of people have been asking me, Stas, should I buy stocks, sell stocks? And first of all, I'm not a financial advisor, so I can't tell you what to do. But a lot of people are freaking out about the midterm elections and how the stock market is going to do, after the election and maybe in the next couple of weeks here. So I want to break down just historically here, and shout out to U.S. Bank Corp. I think U.S. Bank Corp Wealth Management, something like that, wrote this article, and they completely crushed it and broke it down. And when I was reading this, I was like, yeah, I got to make a video on this and talk about it and go over how the markets have done historically over the past 60 years during these time periods. So if you guys find value, hit that like button, subscribe, and let's dive into it. So right here, you guys can see again, November 8th is when the midterm elections start, and the 2022 midterm elections will influence the legislative agenda of the next Congress and could impact fiscal policy, including taxation and spending priorities. And if I come down here, and again, this data right here is from the past 60 years, you're going to see these are all of the presidents, from the past 60 years. We have Joe Biden, Trump, Obama, Bush, Clinton, the other Bush, and you guys, let me make sure you can see this. You can see the returns are everywhere, right? All freaking over the place. You can see here, and this breaks it down perfectly. If you look here at the top in the middle column, before midterm S&P 500 price performance, November 1st through November 31st. So essentially, this middle column right here, the one that I just highlighted, shows you the performance of the stock market since 1962, 12 months before the midterm election. So again, the S&P 500's performance since 1962, 12 months before the midterm elections. And I believe this it wraps the data up on October 31st or something like that. Either way, that's what it is. The last price as of October 31st, the two asterisks, you guys see it down here. Maybe you can't see it, but I'll leave the link to this down below in the description box if you guys want to go read this for yourselves. It is good stuff, trust me. So look at this. In 1962, John F. Kennedy was in office. 12 months before the election, midterm elections, stock market, S&P was down 17%. Lyndon Johnson, it was down 13%. Richard Nixon, down 14%. Gerald Ford, 31%. I mean, Jesus, guys. And if we look down here, all right, when Reagan was in office in 82, 86, they actually did very well. The stock market in 86 ran 30%, 28.5 to be exact, heading into that October 31st date before the midterm election. And it's, down here you can see George Bush came in 90. It went down 11% during that time period. Bill Clinton in 1998, it was a 20% pop, 12 months into the midterms. George W. Bush, it was 16% loss in 2002. But then in 06, 14% gain in 2010. Look, Barack Obama, when he was in office in 2010, it ran 14%, 12 months before, and in 2014. And when Trump was in office, 5.3%, okay? And now with Biden, negative 21%. As you guys probably know, we're living this in real time. The stock market has not been doing good over the past, 12 months. It's just been a freaking disaster. So that goes to show, in other words, what does that data tell us, guys? It is a mixed bag. It is all over the place. Sometimes, and it doesn't really depend on whether it's a Democrat or a Republican, right? I mean, look, Obama was a Democrat. It went up 15%, 14% in 2010 and 2014 when he was in office. And Reagan, right, he's a Republican. It went up 28.5% and 9.5%. So it doesn't really necessarily have to do too much with Republican or Democrat, which should tell you that this is all a bunch of nonsense. And if you're a long-term investor, guys, this should not matter. Trying to time, what's going to happen a year before the midterms, leading into the midterms, it's pretty stupid, right? In my opinion, at least. And if we look here on the column over to the right, this is the S&P 500 price performance, I believe 3 months after the, 3 months after the midterm elections. So, again, the first column we just talked about was 12 months leading into it. Now we're looking at 3 months after, right? And then the next column here, 6 months after. Then we have 12 months after. So you can see that for yourselves, guys. Really, afterwards, the midterm elections, right? It looks like the markets didn't really have much red. It looks like really it's either been flat. Trump, it was down 0.3%. Obama 2014 down 1.1%. Okay, Bush in 2002 was down 3.4%. But other than that, really, there wasn't any drastic collapse. So what that tells me is leading up to the midterms, and mind you guys, when there's a president shift and then we have the midterms coming up 2 years later after that or whatever the heck, there's uncertainty. There's going to be a lot of uncertainty. Oh, is this going to happen? Is this going to happen? Oh, is that going to happen? And, it looks like once midterms are done by the data here, people start to relax. They're like, okay, it wasn't that bad. And that's why we're seeing we're not seeing any crazy declines 3 months after the midterms. It's pretty much a little in the red or flat, or we're actually getting a pop after the midterms here, which you can see back in 1962, 12 months leading into the midterm with John F. Kennedy, the markets went down 17.6%, and then 3 months after, it ripped 17%. 6 months after, which is the column to, the last, or second to last to the right here, went up 23% in the 6 months, then 31% in the year after. So think about it. Let's say in 1962, which I don't know how many of you guys were alive in 1962. I wasn't. But let's say you were. If you panic sold into the midterms, you'd be dumb, because look, a year later, it went up 31%. You would have recovered all your money and then some. So you got to realize, and I'm not going to go too deep into this, but, we're kind of diving into it here. Why not, right? But you got to realize, it's all over the place, right? Typically we see the uncertainty 12 months before, but then after, everyone's like, oh, it wasn't that bad. And, the stock market, tends to recover. And just look at the 12 months after. Pretty much all these are green. They're all green. They're all freaking green, guys, which is insane. I mean, look, we don't have Biden's data yet. But Trump, after the midterm, 6 months after was up 9%. 12 months after was up 12%. Obama, 3.5%. 6 months after, 3%. 12 months after, and then Obama in 2010, 6 months after the midterm, the stock market was up 15%. So this is important, guys. You got to really look at this and realize, okay, if you're a trader in the short term, fine, that's different. But if you're a long-term investor, trying to trade or really sell and time the market around the midterms, I mean, it's pretty foolish in my opinion. And this line right here shows the midterm average, right? And then the non-midterm average. And the non-midterm average here is the average monthly price of return of the S&P 500 in 3 months, 6 months, 12 months increments starting in the month of November of every year since 1963, where there was not a midterm election held in that November. So obviously when there's no midterms, the markets do better, at least in the month of, or at least in the 12 months leading up to November, the markets do better when there's no midterm. Obviously, when there is a midterm, you can see there's a drastic difference here. Non-midterm average is 11.2%. Midterm average is minus 1%. And you can see, really, it looks like, wait a second, it looks like non-midterm, the returns are actually lower even 3, 6, 12 months after. So that's interesting. Non-midterm average, look at that. 3% return 3 months after, 4.2% return after when there would be a midterm election on years there actually aren't, right? And then 6.4% 12 months after. But typically during a midterm, the average 12-month return after the midterm is 16%, which, geez, guys, that is pretty good. And granted, right now, in the where we are right now, and obviously we have a Fed meeting later today when I'm filming this video. We're going to get another 75 basis point hike. We have all this inflation. The economy is in uncertainty. There's a lot more to it than just the midterm right now. So I'm not banking on us seeing a 16% rip or even a 15% rip. Look, 15% is the average here, midterm average, 6 months after the midterm. I don't know. Do you guys think the markets are going to go up 15% from, November, let's say, to, March, April? Do you think that's possible? I mean, shoot, I like it. That'd be great. But, with everything going on, I'm a little bit cautious about that. But the proof's in the pudding, guys. These are the numbers. And again, shout out to U.S. Bank wrote this, I believe. Yeah, U.S. Bank Corporate Investments, Wealth Management. They completely crushed this. I'll leave this down below. And there's more to it. I mean, look, it's not a long article by any stretch of the imagination. This will take you not even 5 minutes to read through, guys. But it's definitely worth looking at. It goes a little bit deeper into what's actually going on right now between Republicans, Democrats, what could actually happen. And mind you, I'm not a political guy. And to be honest, I've said this before, I'm middle of the road when it comes to politics. I have, I like to say, what's that people like to say? Fiscally conservative, socially liberal, or whatever the heck. That's what I am, right? I'm more in the middle, right? And then that's how I've been for years. And, I'm not the guy that can really talk on topics of, the House is going to do this, the Senate is going to, that's not me, guys. So if you want to go watch political content, go watch it somewhere else. But here, we're the stock market channel, and we just broke down the S&P 500's historic returns, according to this table here. So with that being said, guys, if you enjoyed the video, hit that like button for me. Make sure to subscribe if you want to see future content about the stock market, stocks, economy, whatever. And later in today's the pipeline, we have the Jerome Powell press conference, which I'm going to make content on, guys. So make sure to subscribe. Get $10 and up to 15 stocks, each up to $2,000 for Moomoo. If you guys like free money, you got to use that link down below. Deposit at least $100 with Moomoo. You could also get 12 stocks with any amount deposited from Webull. All those are linked down below. And with that being said, cheers, guys. Go check the article. I'll catch you in the next video. Peace out.